We're talking real money.
All right, now the world comes back to normal. Okay, not really normal. We still have viruses and stuff running around. But at least the holidays are over and we can get back to a normal schedule of creating podcasts, videocasts, all that stuff. Hello, everyone. Welcome to the Talking Real Money Podcast videocast. I'm Don McDonald in my lovely little Florida studio that's getting a little more work done on it tomorrow. A little work done. Over there in the Museum of Aircraft and History is Tom Cock in Washington.
Beautiful Washington? Yes. Beautiful, snowy Washington. Icy Washington. Ready for winter to be over, Washington. Yes.
It's chilly here. It's in the 60s.
Oh, yeah. Well, we would just love some of that just regular, boring Seattle 48 degrees and rain. Give me a little of that.
Yeah, give me that back again.
Yeah.
Today I want to this week we're going to do a lot of response to questions because you kind of inundated us with them. And one of them, though, comes to mind because I answered this guy's question, I think it was 2 weeks ago. It was a question about gold and how he agrees with us, but then he puts gold in his portfolio, and he's trying to argue that gold is a good place to invest. So he responded to my response. It's like a conversation, right?
Tit for tat kind of thing or something? Or?
Yeah.
Okay.
So the subject is my response to your gold response.
This is him speaking now.
This is him speaking. We're going to try and lay this one to rest permanently.
Good luck with that. Sounds like you got a live one there. Oh, okay, go.
All right. And he starts out with a little dig. He goes, "You made a pretty cherry-picked short-term rebuttal to my gold comment on the air. Why use the 10-year returns of VT versus GLD, which is the gold ETF from Vanguard? Well, let me start with, and this is why not use a 50-year return? The reason I did it is because I wanted actual investment numbers, and a total global fund and a total gold fund have not existed that long. So I wanted actual numbers. But hey, he says, why not use a 50-year return? We're going to come to that in a minute. Oh, why not use a 100-year return? We'll come to that in a minute. You guys like to stress 10 years of data is just noise, but then go against the logic when you try to refute physical gold as a great asset to hold in small percentages. Here are some real numbers for you, Donnie boy."
He called you that, too.
He did. He called me that.
It's been a while since anyone's called you Donnie boy, I think.
Yeah. So Danny boy and the pipes
Danny
are calling
boy,
for him, but not Donnie boy.
I haven't heard Tommy boy in a long time either. So
Gold's 50-year return is 45 times at the moment.
So okay, but just to set the record, because I'm old, 50 years is like 1972.
Well, I think he was going from 1970.
Okay, just want to make sure we're understanding the time here. Yeah, and we've had some extraordinary time. I mean, you've had big inflation during then. You've had market crash, all the kind of things.
Yeah.
So yeah. Up
so
down.
It's the only commodity that shelf life, once mined, is forever.
God's sakes. Yeah.
Its physical properties never erode. It is a vital member in growing metal in growing technological infrastructure. Yeah. Its demand cases are only I love this where he expresses future as fact. Its demand cases are only going to grow exponentially.
Okay, that's speculation. So take that one. Nobody knows.
Okay. Physical gold has tremendous tax advantages as well.
In what regard?
He explains it for us in a moment here.
Okay.
I can discreetly sell small coins whenever I want, tax-free.
Oh, so wait, I want to make sure I'm understanding. He can cheat on his taxes and gold makes it easier. By the way, there's bigger ways to cheat on your taxes that you may or may not get caught either. So we could we could do a whole show on that if you prefer as well, but not saying I recommend it. But okay.
He's actually saying I can cheat on my taxes.
Yeah. By the way, how much do we get if we turn him in? Do we get a reward or some kind?
I don't know. But anyway, then he goes on, I can pass down gold to my heirs tax-free as well. Well, you can pass down a lot of things tax-free.
You hand them the gold and
Yeah.
Okay. Yeah.
You guys love to tout about having multiple buckets to choose from in retirement for tax efficiency purposes. We never mention buckets. In fact, I don't even like the term buckets. Gold is an additional
That's
bucket
because
to
of
add
the
to
author
toolkit.
of
Yeah.
That's because you don't like the author. Okay.
Don't
Leaving
like
it
you.
at that. Yeah, exactly. All right.
Finally, then
Yeah.
I'll let you respond.
Finally. Yeah.
Well, it's a long note. Gold is a unique asset class that I will always have a 3 to 5% allocation to, regardless of what you say. So it's not him I'm trying to convince.
No,
He's unconvincible. It's you guys I'm trying to convince.
He's trying to turn us into gold bugs.
Well, no. I'm saying that. I'm saying I'm
okay,
not going to
okay.
try and convince
I'm so
him. I'm trying to
so
convince
circular.
him.
It's hard to keep track
It is.
of. Yeah.
I agree that a globally diverse portfolio of stocks is superior wealth building strategy long term, but physical gold has a legitimate place in many portfolios. I'm 97% stocks at my age and will have zero regrets in 40 years about my small physical gold position. I guarantee that.
Okay, wait. You gave the return of gold since 1971 or 2 at 45 times.
Mm-hmm.
What?
Well,
has
actually, I am looking at an article from this was from the end of 2020, so a little while ago.
Yeah, okay, a year ago.
A year ago, when the author of this article has they have a chart here that shows that gold from 1970 to September of 2020, over the 50-year period, returned 53,000%, so 53 times.
Yeah. Okay.
Against the S&P's
S&P 500.
Yeah, S&P 5.
Okay.
Oh, he used the S&P composite because the 500 didn't exist that whole time. But the S&P composite 37 times. So gold did beat stocks over 50 years.
Yes.
But
I'm
Tom,
waiting for
isn't there often more to the story?
I'm waiting for the you know what to jump in here.
This is the same number game, cherry picking, that the indexed annuity people use. They tell you the return of the S&P 500 was X.
Yeah.
Compounding.
Without adding
dividends.
Yeah, which do kind of help.
If you added in those dividends and reinvested them from 1970 till 2020, what would the S&P 500's return have been?
I have no idea. A lot.
684 times.
So 684 times versus the 53 times.
The 53 times. Yes, 684.
I'm not smart enough to do the percentages, but that's more than 10 times greater. A lot of times in there, but right? Isn't it?
It is.
I don't know. I'm just saying.
See,
don't call me a genius. Yeah.
There are lies, damned lies, and manipulable statistics. Manipulable.
Thank goodness Disraeli came along with that one, right? Okay, so gold.
And the one more little quick thing. When people tout that 50-year return of gold, what they forget is that from 1970 until 1980, what was happening to gold? One, the economy was a disaster. It was just,
yes, it was. Yeah.
Plus, there was pent-up price demand for gold because we had decades of gold controlled at no more than $35 an ounce. And the fact of the matter is, today, adjusted for inflation, gold is cheaper than it was in 1980. You would have lost money if you bought it from 1980 on.
Yeah, okay. So let's go back. First of all, for full disclosure, Don and I do own gold producing companies. We do own gold mining companies.
We do.
We do own, in a way, gold. We don't own it. I don't know. I've been to your house to look in the safe. I don't have any in my safe. I got a ring. That
is the extent of my personal gold ownership.
My wife's got a few additional
My wife
things.
has more gold than I have. Yeah.
Okay. So, and again, just for perspective, because last year was a pretty inflationary year, right? I mean, gold's always it's the hedge against inflation, right? I mean, we had a pretty big jump in inflation. Gold last year fell 3.5%. Now, why do I personally, this is me, hate gold? Number one, I don't like investing in things that are emotional, because emotions and your money should be separated, right?
Right.
Pretty
Absolutely.
clearly, we can say bad decisions are made when you get emotional about your money. And gold is one of those things, like it's emotional because it's flashy, it's exciting. The history of gold is like, I lost a relative, by the way, up in the mountains in the gold rush of California. That's what's exciting, right? I'm going to go be rich with gold. So I think people still have that feeling about gold. But here's the reason that I really hate it. Oh, I'll give you another. I want to give you a quote. Well, the reason I really hate it is it's too heavy to hoard. In other words, I'm serious. Let's just take this one step further.
He doesn't want to work too hard.
Most people have physical gold because when the world comes to an end, I got my gold. Well, they got their guns and ammo. But if you want to carry around your gold,
if they want your gold, they're going to use their guns and ammo. And so you're going to have to, what you're saying basically is you're going to have to run with your gold through the woods.
And it's hard. It's heavy.
It's heavy.
So, yeah. Okay. But I still, at the end of the day, here's a big gold bug who is now saying, I love this. He's recommending investors pare down their gold holdings to 3% of their portfolios from 5%. Guess where he thinks the other 2% should go?
Well, probably not into stocks.
Not into stocks, not into bonds, but cryptocurrency. Because it's easier to carry cryptocurrency, by the way, than gold. It's just absolutely like gold. It's a pure speculation. Whatever the next person says it's worth, that's what it's worth. So
you can carry your crypto on a little tiny flash drive.
Or you can throw it in the wastebasket and forget all about it and spend the next 3 years trying to find that little piece of whatever.
Yeah, but when the world ends, you can run off with your flash drive, then you'll find there's no computer to put it in.
Negotiate with the guys with the guns and ammo. Good luck with that.
But there's no electricity. Watch Station 11 on HBO.
You'll know all about it. Yeah.
You'll know exactly what to do.
So, okay, we're going to respectfully disagree. He's welcome, by the way, to hold his physical gold. It makes him feel better. We're not gonna do it. You're not changing our mind. And number 2, please don't cheat on your taxes, because I just...
Well, we hate to lose audience to jail.
Well, thank you. Okay, that's a better answer than
I mean, it's bad enough that we're going to lose Elizabeth Holmes. She's going to now be in jail.
I wonder how long, but we'll see about that. So
she's going to get some.
Yeah, something. So, yeah, we don't recommend gold.
I wanted to mention that over 100 years, the stock market has heartily defeated gold. So if you want to cherry pick 50, let's pick 100. The fact of the matter is gold has many, many, many inherent problems as an investment. It cannot grow more valuable in and of itself. It's only based on what someone else is willing to pay. That is not the case with companies. That's one of the things we need to get through our little thick skulls. A business can grow more valuable. Think about non-publicly traded companies. Do they become more valuable even though there is no greater fool buying their stock? Yeah, they do. Because they create wealth through building assets up. The only way you can build
the same way. You get dividend,
the only way you can build up
interest.
Gold is to buy more of it.
Yep. And then find other people that think it's worth more.
Right.
Pawn it off on them.
That is called the greater fool theory.
Indeed.
Actually, really, is that a theory? I think that's the greater fool
since it's gold,
rule.
it would be the greater fool's theory.
Greater fool's gold theory.
I'll work that in somehow.
Or the greater fool's gold rule.
Fool gold ruled. Yeah, exactly. Yeah.
All right.
Enough on gold.
The fool rule. All right, so we did that. Now, in tomorrow's podcast, we're going to do, instead of doing another topic, we're going to do like a billion questions. But given that we have an extra moment here, I think we ought to just maybe slip another question in for Tom because he loves them so much.
Easy one. It's a new year. Let me ease into 2022. All right.
No, not that one.
Not that one. Okay.
All right. Here you got one. This one's from our friend Cass.
Yeah.
Cass is in Mississippi.
Mm-hmm.
I'm Cass from Mississippi. She's got a very
I
Mississippi
knew that
accent.
was coming in. Yeah, I knew the accent was going to.
Well, she's from Mississippi.
Okay, but she might have been transplant from California. What do you know?
No. She calls us, and trust me, she calls.
Okay.
She has an accent.
Okay.
She's sweet. I love Cass, but
okay,
she's from Mississippi. Here's the question. Paul Merriman's 4-fund portfolio appears to contain no international. And you guys talk about having international at about 50% of the portfolio. So can you ask Paul about his international allocation?
Yeah, hang on, I will. Hey, Paul, should we put the international back in there?
All right, we'll do that one
he's
later.
78. He doesn't hear that well, so it may be a while till he responds. So,
all right, do this one. This is more like a question, and it's really, really quick. Inheritance.
Why do we have to be the middleman with Paul? I don't know. Call Paul yourself. You got a phone. I don't get that.
We are the Paul middleman. We're like Paul's minions.
Mr.
Merriman, may we do your bidding today, sir?
We have a question for you, sir, if it's not too much trouble. Okay, go ahead.
Oh, Mr. Merriman, my wife. Oh, no, that's just for us. My wife recently received $200,000 from the passing of her uncle. She plans to pay off her bills and our HELOC we used to purchase some property totaling $60,000. What is the best way to invest the remaining $140,000 for retirement?
This is all. I just got a call today from a very nice, almost 70-year-old woman who's longtime listener, $140,000.
First-time caller.
Yeah, she loves the show, listens, and she just said, just tell me what to do with it. Or can I just hire you to do it? I don't know because I don't know enough.
Right. That's the issue is that we all want to believe that there is just one right answer. That there's that answer. That's the answer. It works for me. It works for everybody. But while investing is incredibly simple, it requires a great deal of knowledge of the individuals involved. This is why personalized advice is important. This is why we think most of the people who sell product are dangerous, because it takes a long time and a lot of information to really understand what you want and what you want the money to do for you to figure out how to get there.
And at the beginning is the thing you want to spend the least time on, the plan. You want to move to step number 99. Just tell me how to invest the money.
Right.
Well, what's it for? How much risk are you going to take? How long do you need it? All those things have to go in there first. Because after we know all those, then sure, we can give you
that part
4 funds,
is actually
6 funds,
once we
8
know
funds,
you, that's
whatever.
easy.
Yeah. But I don't know enough in this case to just say, sure, go ahead and own blank.
Yeah, because you've got to build the right portfolio.
Right?
Gold, yeah, GLD.
Right. Okay.
You got to own the right portfolio for 2 things: your needs and your risk tolerance. Your risk profile really is more appropriate. Got to know those things.
By taking the risk quiz.
Go take our risk quiz at talkingrealmoney.com. That'll give you some guidance. That's a good place to start. Thank you for your question. That was sent into talkingrealmoney.com. You can also call us at 855-935-TALK. And one other thing, you can sign up for Retire Meet coming up virtually for sure, in person, we hope, in February of 2022. That would be this year, right, Tom?
I think it's just like a month and 2/3 from now. So almost 2 months. But yeah, soon.
And it promises either way to be another terrific event.
It includes the elusive Paul Merriman. So
he will
got that going for
be there.
He'll be there. He'll be there.
Yeah.
So,
yeah. You can ask him questions.
Exactly.
Hey, Paul, why don't you? Yeah, just do that. And then there's that. We have a Paul, and then we have an Apollo.
That's true. Paul Lopescu from Dimensional Funds. Wonderfully gifted speaker, as is Paul Merriman, by the way, and terrific information. Both of them.
And then we also have a Herb. Is it an herb? Is it an herb?
It would be the herb superb, as I call him. So he will be helping you protect yourself against those who would harm your financial position.
I honestly think he should come in like armor and do the thing. I think that'd be funny.
He likes the cape better.
I know. No, he just doesn't have the Superman physique.
I'm going to let you say that.
No offense, Herb.
Oh, now I can see where this is headed, and it's not going to a good place. So,
is there anybody else that's going to be there?
I'm not. No, I think it's time to go. You can learn all
right.
of them.
How do people sign up?
RetireMeat with 2 E's, not an A.com.
No, works with an A too.
That's
Either
right.
way. I did.
Come for the free roll of sausage or something?
Go to retiremeat.com. I should redo that website and just have it with meat hanging there.
What are you, Lady Gaga at the Met?
Warning,
didn't she wear an outfit
content.
Didn't she wear a costume with all meat,
a meat
or something
dress.
once? Oh,
yes, God, she did.
Disgusting.
Yeah. All right. Thanks for being part of our little pod video cast extravaganza. I'm Don. That's Tom. We hang out here all the time, except during holidays, talking real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap. That's a wrap. That's a wrap.